I want to give a brief introduction to income method number 1B. It's a new income method in the blueprint that Ernie's been working on, and he posted the content in the electronic version of the blueprint, and he just wanted me to make sure that this was introduced. So first, what is the blueprint? The blueprint is our full course detailing the proper protected married put structure, and then the proper way to use the 12, now essentially 13, really 14 different income methods that are used against the married put structure. What are income methods? They're adjustments that are used to reduce the initial low risk of the married put position, gain income, and potentially bulletproof the trade where we have no risk to the downside. We still have unlimited upside going forward. And what is income method number 1B? Well, it's a new income method, as I mentioned, Ernie's been using for a few months. What he looks for is after a pullback, which we've seen a couple of back in June, I believe back in March and April there, when he feels that the underlying or the market has hit a bottom, he's going to look to do an income method to generate some income, but also leave the upside open as well. Now, many are familiar with the married put structure in general. The way that we approach it is a little bit different. And most of you are familiar with what we call income method number 1. It was just the first income method that Kurt developed after he wrote the blueprint. And it's very simple. What is the married put? I buy a stock, I buy a proper protected put far out in time, and then the natural instinct is, let me just sell a call against it in the proper structure. And in this case, what do we get? Well, we get a risk reduction because the premium from the call is going to reduce the maximum risk on the position. We still have a good potential for some upside profit. We get the income to lower the cost basis, but it also caps the gain. If the stock breaches our short call strike price, then we start giving back because we no longer have positive delta because the positive delta of the stock is countered by the in-the-money call. And if the stock continues up, our put is declining in price and we're not getting the positive delta back. This income is obvious, as most came from covered call trading, and we have 2 questions that came in from covered calls that we'll get to in just a little bit. But that's why it's shown for free in the sketch. It's a free white paper that introduces the idea. You just go to radioactivetrading.com and enter your email address to get that PDF. What is different with income method number 1B? Rather than sell a call against the married put position, we've got a stock and put structure that we're looking to trade for a few months out in time. What Ernie's been looking to do is sell an out-of-the-money put, maybe 8 to 10% out of the money after a market pullback when he thinks things have stabilized and it looks like the market and the stock itself is starting to move back up. This leaves the upside open. It does not cap the gain, as does income method number 1. We still generate some income by selling the put option, which lowers the cost basis, lowers the initial at risk in a sense, and gives us a premium. If the stock moves up and the put expires worthless, we keep the entire premium, just like a cash secured naked put. But because we have the long put already in place on this structure, you won't have to put up any margin requirement to enter this trade. Your broker would likely just see this as a position that is sort of a calendar put spread, where if I'm selling the 98 put near term for September 2nd and I own the December 110, that's covering the short put obligation. So no additional monetary requirement is required, as it would be for a naked put or a cash secured put in those scenarios. However, the maximum risk is increased. Why is this risk going up to 89.3% if I'm generating 92 cents of premium? And it's because the protective put, our December 110 put, can only cover the stock or the naked put sold put position. It cannot cover both. So if we're wrong and it starts to fall, well, naturally, we're going to look to make adjustments to that sold put or close it out to keep the risk in a controlled fashion. Single digits would we want to. Again, it's important that this 1B should only be done after a decline or you feel there's a market bottom, things have stabilized, and it's going to move back up in price. Can you use income method number 1 and income method number 1B together? Of course. You can sell the call because the stock in the married put is going to be covering the obligation of the call, and you can sell the put without any additional monetary requirement in that case. It'd be similar to just doing a short strangle on a long stock position, which would require you to put up the the cash secured put margin requirement, or what we might call a covered combination, which was a popular strategy that was used many years ago and I think still is, where you buy a stock, sell an out of the money call, and sell an out of the money put. But remember, even if I'm doing income method number 1 and 1B is a combined income method, in this case, extra premium is received, but the downside is still increased. And as I mentioned, income method number 1B should only be done after a decline when upside is expected. And that's not really the SIGA model I would look for selling a call on the married put if I thought the stock was moving back up. I'd want to wait until maybe the stock hit a peak before selling a call using just income method number 1. So this is just another way to generate income, reduce cost basis, and reduce the risk on the position. If things go the way that we want and the put expires worthless, we open a low risk trade, we apply the income methods to that position. Using the different rules and adjustments in the blueprint, of course, we get to a position where we're lowering risk and potentially can continue the trade and bulletproof the trade, still getting extra income and moving forward. Now, this was just an introduction. It's not enough to go out and start this structure. You don't want to go out on Monday if you don't own the blueprint or haven't heard us talk about radioactive trading, enter a married put position and sell a put right away. You want to get the full story, the proper structure to control risk, the ins and outs of the 13 different income methods, when not to use them, the proper structure and the improper structure that can get you into trouble. Blueprint also has full chapters on combining income methods and when to exit the radioactive trade married put position. So at any time you go to radioactivetrading.com, look at the products tab, of course, get access to the blueprint. It's all electronic now. It's accessed at our educational portal, learn.powerup.com, once the purchase is made. And of course, for blueprint owners, you can see the write-up on income method number 1B in the income method number 1 chapter on the electronic copy of the blueprint at learn.powerup.com. Those of you that own a hard copy of the blueprint, write-up will soon be available in the latest blueprint and revisions update section of your members-only account. Just go to radioactivetrading.com, log in, click the blueprint revisions and updates, and you'll see the different updates that are available for your edition of the blueprint. And sometime next week, we'll post a full members-only webinar on income method number 1B based on Ernie's thoughts and the trade he made on the BX position and others. And that's going to be in the Blueprint Owner Only webinar section. All right, so I just wanted to run through that real quick, just to let everyone know that that's there. The next income method in the Blueprint, there's really about 15 income methods. We always used to joke that the 13th income method was do nothing. Nothing matches your SIGA model for the 12 income methods. Just wait, do nothing, wait for a better opportunity. There's also income method number 8A and 8B. So there's 2 there as well. So technically it's about 15 different income methods that are used right now with the addition of income method number 1B.